Greetings. Today is July 1st, 2010, and this is Gary Miller with Trusted Financial Advisors with the quarter end and year-to-date summary. And I want to begin with a quick disclaimer. When I talk about client performance in generalities, I want to remind you that our clients all have individually managed portfolios that are specifically designed to meet their needs. We go through a careful process of getting to know our clients, their comfort level, their tax needs, their income needs, all of these factors, so that each portfolio is different. However, I can speak in some generalities when I look over my client portfolios and give you some flavor of how they're doing and how we're positioned for the current, somewhat challenging market environment. Now, year to date, we're doing quite well compared to the equities markets. The stock market, as measured by the Dow Jones Industrial Average, is down about 5%. Our clients are up about 2.5%. For the quarter just ended, we had a rough quarter. The Dow lost about 10% of its value, and our clients gave back maybe 2% of their value on average. And again, variation. Some people actually went up, some people went down more than that. It all depends on the mix that they had and their willingness to accept risk. But overall, we're very proud of our performance because, as usual, we tend to minimize the bumps on the downside and capture most of the upside of the stock market performance, although we do not use the stock market in exclusivity by any means. In fact, the reason we're outperforming in the current market environment is the fact that over the past 2 or 3 years, we have shifted our client portfolios to a much greater exposure to fixed income securities. Now, what do I mean by fixed income securities? These would be bonds, both corporate bonds, government bonds, and municipal bonds, and something known as preferred stocks, which we hold a great deal of. And these are a superior security to common stocks. Their dividends are guaranteed. They tend to pay high dividends. And we were able to scoop some of these things up when they had absolutely mouth-watering yields, which you can't touch today. So we're enjoying the fruits of those purchases over the past few years, and we have a significant amount of cash flow coming into our client accounts. Even today as we speak, a lot of accounts are being credited with quarter-end dividend and interest payments. It's nice to know that when perhaps the equity markets are not too exciting or even a little bit negative, that you're earning income, that you're seeing income come in, that your money is working for you. And because many of our clients are retired or approaching retirement, it's extremely important that they have this income to depend on, and we're really proud that we've been able to deliver that. The overview that I would give you is that clients are well above where they were a year ago in terms of their account values. Most of them have recovered the values of their accounts from 3 years ago, let us say June of 2007, which not too many investors can claim because we went through one of the worst bear markets in American history from 3 years ago to the interim, as we all know. So we've recovered, and that gives people a lot of comfort that their assets have been protected. Going ahead, I do not claim to have any particularly strong ability to predict the future in terms of macroeconomic events. I'll leave that up to the talking heads on television and the economists who make very large salaries by predicting the future, most of whom are wrong. As one jokester quipped one time, if you laid all the economists on the planet from end to end, they couldn't come to a conclusion. And we've seen that recently. Many of them started off the quarter 3 months ago with bullish expectations, big recovery coming, everything's moving along. And by the end of the quarter, the same ones were talking about a double-dip recession. I really don't know if we're going to have that. What I do know is that we own some really solid companies with really solid free cash flow and companies that weathered the worst of the financial storm in very good financial shape. Now, there may be a couple of exceptions that I'm looking at. There may be some changes coming up in the near future, but don't expect to see large changes in the portfolio. We buy businesses, and I do a lot of really detailed financial analysis and do a lot of homework, and I also incorporate the analysis of other analysts in my overviews to decide when to buy them, what to buy, when to hold them, when to fold them. And like I say, I've done some careful analysis recently as we neared quarter end, and with maybe a couple of exceptions, I intend to hold on to what we have. Of course, things could change by tomorrow, but we take the long-term view, and as most of our clients know, that has paid off handsomely. So this is Gary Miller with Trusted Financial Advisors, inviting you to contact us if you're a prospective client. And if you're an existing client, I'd be happy to talk to you about your existing portfolio. And I want to thank you very much for your support and for your emails and for some of the nice things that you've been saying on the phone to me as we go through a little bit of a rough patch here. Thanks again. Thanks for allowing me to be of service.